Like the black.
Hey, what is up, team? Chuck with Traders War Room, guys. It is Wednesday, and part of our deal coming into October was we were doing live training on Wednesdays. So today we're going to go ahead and keep up with that live training. This won't take long, about 15-20 minutes. These are only supposed to really give you guys a nice little kind of refresher, little, deep dive into some of the technicals. And then you guys can always come into the chat groups as premium members, ask the professional question. And if you really want to do a deep dive individually, you go ahead and book yourself a one-on-one mentor session. We get you covered. But today's topic is going to be protecting losses. We want you to keep those gains green and your losses minimal. And this is obviously easier said than done, but we're going to go ahead and look at some of the charts and kind of talk about different strategies. Hindsight, of course, being 2020, is always a good idea. We can start getting strategies and battle plans as we develop into a good rhythm as we move forward into our trading and investing journey, going from novice, intermediate into more advanced trading with experience behind our belt. Before we get started, obviously, if you guys are on the Discord platform, thank you for being part of the TWR Market Warriors. This is also going to be published out to the free members. They don't get the live stuff because they don't get to ask questions via the Zoom and everything. But I'm highlighting our birthday special because I want people to know that TWR is serious about having you be part of a market warrior team that we have. And because we're so serious and it is a birthday month, we're offering 50% off of all of our platforms. Guys, we have a text message platform, an instant message platform, and our flagship, the Discord platform. 3 separate platforms offer a different user experience to each individual experience depending on how they like it. Text message, you're going to get a simple text message alert. Instant message, you get little pictures, you get more alerts and stuff like that. And then the Discord, of course, our flagship, you get it all right, we got everything underneath the sun in the Discord. 50% off or more depending on the package, so definitely check it out. And I want you guys, we're not going to dive into this type of stuff. I want to go ahead and hop into something real quick. I want to go into the website, so I'm going to come out of here real quick. Forgive me just for a second. We haven't gone into the website for a while, and I want to show this to people real quick. So, oops, nope, Zoom website. Sorry about that. Here we go. All right. If you guys haven't gone to the TWR website, man, I want you guys to check out our website because we absolutely try really hard to give you guys an intuitive website with something for everybody and a one-stop shop. When you come to the TWR website, it has everything underneath the sun. And as you can see, our engineer, Liam, he does a great job keeping this up to date for us. You got all about it. You can read about us right here. You can message us and talk to us on here, give us a little customer comment. You can log in and become a TWR market warrior on our website. We also have our classes, upcoming classes, historical and previous classes for purchase right there. Trading platforms. This is the one, okay? This is where you go to find out the information about the Discord, instant message, and text alerts. It has little descriptions, also has the links. Our mentor page as well. You can go in there. And in our trading university, this is another one where you can go in here and you can read about our trading university. And this is where, if you purchase one of our university courses, this is where you would go in and you would go into your virtual classroom. All right. And I don't know if you guys have taken virtual classes online for college, but we have mimicked our virtual classroom to be as intuitive and to be like that type of environment, except for trading and investing. All right. So it's definitely one of a kind. We put a lot of effort into that, and we really want to highlight that. Now that I got that out of the way, let's go ahead and hop into Weeble. We're going to go ahead and talk about protecting them losses. Let me make sure I'm sharing this screen with you. All right. So here we go. And if you're in the Zoom session and you got questions, go ahead and drop them in the chat group and I'll make sure I cover them. But we're going to go ahead and go into a single panel for this one right here. And let's go ahead and talk about SPY. SPY is one of the most popular things, and it kind of gives us an overarching idea of everything. Now, when we're talking about protecting losses, okay, it's understood that we already have a game plan going into the trade. which means we've already done our due diligence and our idea of entering the trade. So when we look at SPY, you know, obviously I always tell people before you get into a trade, you got to go ahead and do your due diligence. You get the bird's eye view approach, right? So if we were going to go ahead and break SPY down, let's go ahead and do this, right? Bird's eye view approach, we at least need to be on the 4-hour chart or better. All right. I like the 4-hour chart. Some people like the day chart. Some people like the week chart, but I prefer the 4-hour chart. It gives us a good range. We can go into a range of 6 months here, which is perfect for the 4-hour chart, right? And I usually slide it over because we don't need all of this stuff. We don't really care what happened back here. We're more concerned with what's been current with like 3 months and beyond, okay? And really, we really like about a month and a half, okay? Specifically with things that are moving and shaking. Now, what we can see right here as we strip away some of these indicators, okay? We're gonna go ahead and take stop loss or the super trend off. That's just one of those things that we use when we're in it. We got simple moving averages and we got a regular moving average. We got the 10 and the 20, and we got a 50, okay? Basically, this is our momentum indicators. And then we got some of our sub indicators. We're not going to really cover that. We're going to talk more about protected losses. But in order to do that, we have to have a plan. So we got to put some strategy in here. If we were going to trade SPY, right, we'd want to kind of put some lines, look at some levels, right? We're doing bird's eye view approach. We don't want to go all the tippy tips, right? We want to kind of have meat and potatoes. So we kind of get our range. Here's our bottom range. Here's our top range. Top, I always do in blue. That's just me. Red, I always do in red. Or bottom, I always do in red. And then in between, I always do in purple. Okay, so we're going to go ahead and put a battle zone. And we're gonna put that in purple. And that's just going to be smack dab in the middle. And we're going to just eyeball this one and right there. Boom. All right. Now, what we do is we got a pretty good basis here, right? Okay, so good. We're going to go ahead and go into a little deeper now. We went out, bird's eye view approach. The bird spots the worm. It swoops down and it's going to start attacking its prey, right? Let's go ahead and go into the 1-hour chart, all right? We come into the 1-hour chart and we don't know what's going to happen tomorrow, right? But we do know what happened today. So let's focus on today. We've been popping up at this top range, right? This 437 for a minute, okay? So this is known resistance, okay? And yes, you could call 438, 60, the tippy tip resistance and 438, whatever. But we got meat and potatoes here. This is eyeball zone. But basically 437.50, 438, whatever you want to call it, is good resistance because we got a lot of price action here, right? And so we go ahead and decide, you know, this is resistance, this is support, you know, we're structured here. We got support. It is validated on previous time frame action over here, right? Price action here. It's validated. We got almost here, and then we got current levels here. So it's validated. This is a pretty good, decent level. And then we got our 50-50 line in between, our battle zone in between right here. So we like this level. All right, since we are good with our levels here, I don't see much adjusting. We're going to go ahead and rock it on in a little bit further. We're going to go into the 15-minute chart. All right, now this is where we start developing our strategy for trading. So let's pretend we didn't know what happened today, okay? So this is what happened today. We're going off of yesterday, all right? The range is still held for yesterday because they were still good. We might have moved this up a little bit because this didn't happen. This was here, but the ranges were pretty much the same that we had yesterday, right? Would we agree? The top was the same, bottom was approximately the same, and we had about the same level. So we come out of yesterday and we have a battle plan. Okay, we tell ourselves, all right, SPY, here's our midline. If we stay above our midline, right, we're going to go ahead and think long. Okay, we're going to think long trades. If we close above our midline and start popping off, we're going to think that we got a good opportunity that we can ride and push towards our top level. Okay, and this top level can even act as our out of the money contract. We can even go a little further out the money because SPY is extremely volatile and it has liquidity, right? So we can go a little bit further out the money, but we don't want to go too far because if we start to reverse, like we saw today, the contracts and theta starts kicking in and stuff like that. Okay, so we got our plan, right? Here's the battle zone. We're like, all right, guys, if we close above here and we start to trend, we're going to go ahead and go long, expect to push to the upside. If we close below here, we're going to expect to go down to the downside. on our way towards support where we'd expect to get the bounce and we'd expect to get the rejection, right? That's what we're expecting when we get to resistance or support. Okay, so we could see what happened here today, but we didn't know today happened, right? So we're just going based off of what happened. So as we're coming into pre-market, right, we're still above our battle zone. So the likelihood of us coming in here and we're like, all right, we're going to go ahead and think long coming into the day. So obviously we trade off the 5 minute, at least I do, right? Most of us trade off the 5 minute. This is today, right? And as we come into the market, we skirt the line, we reject it. We skirt the line, we reject it. And we say, okay, awesome, great. We're starting to reject. We open up and we open strong with lots of volume, good indicators. We get 3 reasons why to push the buy. We're above our moving averages, right? We're above our battle zone. And we go ahead and say, you know what? We're going to go ahead and take the long shot. And we pop up, then we come back down, but we're holding the line, okay? And we pop back up, right? And there's an opportunity to exit, but say we didn't exit, right? Some people may have exited. I know we got into a call play on SPY. We got into it basically around this area, and some people took their profits here. Some people swung like I did, and we ended up, causing some distraction, right? But I saw some people take profits here, which was fantastic, right? A little bit of gamble never hurt anybody if you got, all your eggs not in one basket. But we pop up here, fantastic opportunity to take this trade, right? And why would you want to protect your trade and take this? Well, when you pop up here and this doji here was extremely shallow, almost like a morning star, right? Almost like a morning star up here. And it's just kind of shining. And it's giving you that idea that, it's kind of a 50-50 trade. There's not really anything indicating strong push to the upside or strong push to the downside. The very next candle is very strong bearish push to the downside, breaking your moving averages. That would be any type of inside this 5 minute period would have been exit criteria. So people went ahead and took the trade here, the call that we pushed in, right? Popped up, nice push, went ahead, I saw things, like 30, 40, even I think it even hit at the highest at like 75% on the trade, right? And then it started spiking down. And this is where you want to start protecting your losses, okay? Now, if you have the liquidity and you have the extra gains, right? We went ahead and like I took the swing on this trade because I was gambling a little bit, right? Because it was a cheaper contract and it was becoming a lotto. But say I didn't have the extra capital to gamble on the trade. How am I protecting this trade if I didn't exit here, right? Okay, so I don't exit here. How am I protecting this? Well, it pops down here, okay? We have to have an exit strategy. Typically, a good rule of thumb for an exit strategy is to go in between your top level resistance and your bottom level support, in between of your 50-50 line, all right? What do I mean by that? Well, you would go ahead, and I use orange for these, right? Okay. I'm going to go ahead and put an orange line here. All right. And now I'm going to put an orange line here. And I'm going to, why does it keep going blue? Anyways. All right. We'll keep going orange. All right. I'm going to put this 50-50. Now, we don't know that this price action is here, right? We're basing this off of the previous day, but we already had our ranges, right? And we're just putting these lines in here. These lines act as reversal lines. Okay. All right. What we do with these lines is these tell us these are our stop losses. This is our plan. This is our strategy, okay? Based off our battle zone, if we pop up here and we start to roll, right, to the top, okay? Once we start to break this line here, our stop loss goes in between this area and this area, okay? So let's pretend we're good for the money, right? And we're riding, okay? Once we start pushing past this line, since we already have this line here, we start to move our stop loss in between 50-50 between here and here, and that's our stop loss. Boom. So if we pull back to that line, we're out, okay? We start to push up again. We move our stop loss back up. We start to pull to there, we're out. And you keep riding the wave as you go up. If we reverse, so we're long on this, and we end up reversing, and we go past the battle zone, we come down to this line. This liners are no BS. We cut unless we're going to go ahead and ride and gamble out. Now, this rode out a little bit, right? we kind of skirted this for a while, and theta starts kicking in, and we still not quite down there yet. And then it kind of gives us a little bit of hope. About right here is where the exit criteria stop loss should have came in, right? Definitely when we started skirting this line, and we definitely closed below, if you weren't going to swing the trade and you were riding momentum below your shorter moving average, this is where you come out for sure if you're not swinging the trade. This has to be your exit criteria, especially if you got a small account and you can't take the risk with your account. You got to come out. And that's just a simple way to go ahead and protect your risk. So once again, how do we do that again? Let's go ahead and go back through it. Let's do it on a different chart. Let's go into QQQ, because I want you guys to really understand this, because this is an easy concept to get yourself into a rectangular type of pattern with probabilities and create stop loss levels based off of the chart, not the percentage, especially if you're doing derivatives, not the percentage so much as mainly you're looking at the chart. You want, because you'll get swept on percentages all day long. Okay, you want to go off of the chart mostly, because that's where you want the price action to go, because typically, you know, you're doing 25% stop loss or 15% stop loss. Market makers and the big hedges, they know that. Okay, so they're going to sweep liquidity all day to 15%, 25%, even 30%. Okay, but if you keep your stop losses at the actual chart, a lot of times you'll be able to save yourself from being swept and be able to catch the run back up. So let's go ahead and go on to a different chart and start this anew. Let's do IWM, or let's do an actual stock. Whoever's in this class, anybody want to give me a stock? Whoever's in here, just a random stock in the chat group. You can just put one in there. If not, I'll just pick one. 5, 4, 3, 2, 1. We'll do Starbucks. All right, Starbucks. Remember, bird's eye view approach. All right, we're going to look at the 4-hour. I'm going to get rid of these lines. First of all, we want a clean chart. All right. All right, clean chart. All right, and we're going to look at what we're looking at with Starbucks. Okay, so I'm going to go ahead and put a line. I'm just looking for some top level resistance. All right, going to go and change that to blue. That's just me personally. That's what I like to do. We're going to go ahead and put this bottom line here. Resistance, red. All right. And then we're going to come in the middle with our purple. All right. Everyone can agree based off of what we have here. This is near-term resistance point, near-term support point. Yes, we have a lower here, but near-term, right? This is acting as support. And we got our 50-50 line, which 50-50, we really want to kind of cut through a majority of price action. If we go follow this line, I mean, we got majority of this price action is pretty much right here with our 50-50 battle zone line, right? All right, we like that. We're going to go ahead and go into the 1-hour chart. We're forgetting that today happened. Yesterday, we're creating our plan. We're like, all right, we're above our battle zone by far, right? And we're like, okay, here we go. What we can do now is, since we're above our battle zone, we're going to go ahead and use this box as our probability box. Okay. We keep this as our no limit. We can even adjust this a little bit, because now we're inside of a little bit more. Since we got price action here, we can adjust our bottom level, right? And our battle zone, we like our battle zone here. We're going to go ahead and put a midline inside of here. How does it keep going blue? I don't know. All right. There we go. All right. Oh, that's why. Okay. All right, there we go. We're going to go ahead and put a midline right in between. All right, and we're just eyeballing. And so this is basically we're creating our box of probability here based off of this day into this day for trading. Okay, so we keep creating our plan. We got our top level, we got our bottom level, and we're coming in. We tell ourselves, all right, Since now this is acting as our support, looking at the chart as we come in, we're going to go ahead and turn that red. This is our further out support, and we're going to now turn this purple. Boom. Same thing as we had, top, bottom here. Now we got our further out. This would be our follow through now, our second level, right? Support 1, support 2, right? Resistance 1, resistance 2, if we had another one. And now we're in the zone. So we're just going to do the same thing like we did. Make our plan. If we stay above our battle zone, we're going to think long towards this area where we're hoping follow through and bullish continuation, but we're expecting rejection. And if we get rejection, we'll get rejection probably back towards our battle zone to retest, but at least a push towards this level. That's what we're expecting. If we fall below this line, we're expecting our push here. Now, where's our stop loss levels going to be? Again, right here, right? Our stop loss idea for reversal, if we go puts, is this here. And if we go longs, is here. Plain and simple, okay? Orange. So if we were to go puts, our stop loss level is going to be this orange line here, because we're expecting to come here. And then if we started reversing, we need to cut our ties here at this level. If we end up going long and we reverse back past the battle zone, then we're going to cut ties here because we're expecting continuation down towards the red line and maybe follow through to support 2, right? So that's what we're doing. Now, hindsight being 2020, we know what happened. Calls would have been the play. And obviously, keeping with the rules, we would have went calls because we stayed above the battle zone. Yes, we dipped a little bit, but the very next line, the very next candlestick was above the battle zone, and we had strong indicators. Cross here to the upside, MACD cross, SMI cross. You can't see a TTM squeeze, but TTM squeeze was pushing to the upside as well. All right, 3 reasons why to push the buy. We take the trade. It pushed up just like we thought, up towards, and rejected, right, and came back down. Notice here, once we got into the trade, right, and we push past this line, what becomes our stop loss line? This line, right? That's the thing. We just move here. We move our stop loss now, which is, this is break even. We move our stop loss up, and this becomes our stop loss if we decide not to swing the trade and take profits. That becomes our stop loss, because we can always take profits here, but once we started reversing out of here, we just move that up and we protect our gains. Now, like I said, coming in here, like I said, easier said than done, right? Okay. Yeah, obviously, we all make the mistake. We all look at this and, you know, it looks so easy when we look at it on the chart. And then we get into it and, you know, the emotions rise, the possibility, we've seen it before, you know, the idea that, you know, it could bounce, we've seen it, you know, it's moving, and all these factors come into play, right? But those that don't have the risk available to gamble essentially with the risk levels, they need to really stay more disciplined and have these type of plans, okay? Because they don't have the cushioning to be able to bounce back. If you only have, say, $500 in your account, that's all you're playing with, then you have to be more disciplined, extremely more disciplined than someone with $1,000 in your account, right? Or excuse me, $10,000 in account, because the idea of you being able to go in and having your stuff just washed out quicker than the other person is higher probability based off of a market catalyst. So, you know, being a little more disciplined until you get your capital up is essential. Okay. Now we all make the mistake. You know, you saw me today. I kept my SPY trade open, and you know, going off of the chart, what we just broke down, I should have took the loss based off of my own calculations, right? But I kept it open because I was hoping on the bounce from this level to the upside, because I was expecting a similar reaction like we had here, right? Because I saw this here, we bounced from here and we came all the way up here by the next day. I'm hoping we get that again. We bounce from here and we come all the way up, especially with Netflix, you know, absolutely killing it. I'm hoping the market bounces with that, but that's a gamble. But I have enough money to cover that loss if it is going to be a loss. And I hope it's not a loss. I hope we end up getting it. But this is just a real quick class on how to protect the losses, utilizing the block square box of probability, as I like to call it, utilizing high levels of resistance, bottom levels of support, and inter levels of lines of effort inside of those top and bottom levels. Okay, remember, if you take anything away from here, is that you want to always have a strategy going into the trade, bird's eye view approach, working yourself in from a bird's eye view approach into the chart and trading off of either the 15 or the 5-minute chart, especially if you're a newer investor. If you're more experienced, 3-minute, maybe to 1 minute, but definitely if you're a newer or intermediate trader, 5-minute or 15-minute chart is your best friend, because it's the institutional levels and they're the ones where you're going to have the best, gauge on actual price action, and you won't have to be as rapid with your decision making. So I hope you got something out of this. I hope everyone gets a little bit of knowledge boost. And remember, the box of probability, man, is awesome, man. Rectangles are great. Rectangles are fantastic because they offer us just straight lines and levels and areas of effort, and we love that. Okay, so definitely. All right, I'll catch you guys later. I'm going to post this into the chat group for the people that missed it, that are premium, and the free members that are out there that are TWR market warriors in lieu of becoming premium members. One day, you guys will be. You guys will get to see this after the fact. All right, until next time, catch you guys.